All right, so let's dive into dividend ETFs for 2025. It's a pretty volatile market out there.
Yeah.
And I think a lot of people are looking for some steady income.
For sure.
We found this research paper focusing on Vanguard Dividend ETFs.
Okay.
You had a chance to look at this one?
I have, yeah. Vanguard's a great choice.
Yeah.
Known for those low costs, which are really key in the ETF world.
That's right. Low fees make a huge difference.
Yeah, absolutely. And this paper highlights one ETF in particular.
Oh, yeah?
The Vanguard Dividend Appreciation ETF.
Okay.
VI.
VI? Got it.
And what's really interesting about VIG is its focus on dividend growth.
Okay.
Not just chasing those high yields.
Yeah, so instead of going for the biggest payout right now,
Exactly.
you're looking for companies that are going to consistently increase those dividends.
Yeah, think long term.
Yeah.
Building a solid foundation.
Over time.
You want companies that are committed to sharing profits with their shareholders year after year.
It's like you're not just getting a handful of pennies.
Right.
You're getting a solid gold bar, and it just keeps getting bigger.
That's a great analogy.
I like that one.
And VIG's strategy helps you avoid what are called dividend traps.
Oh, dividend traps.
Yeah, have you heard of these?
I've heard of them, but I don't really know what they are.
So these are companies that might have really enticing yields,
Okay.
but those yields might not be sustainable.
Okay, so how do you spot a dividend trap? Like, what are some things I should be looking out for?
So there are a few red flags you can look for.
Okay.
One is a really high payout ratio,
Okay.
meaning the company's paying out almost all of its earnings as dividends, which leaves very little room for them to reinvest or for future growth.
Oh, so they're paying it all out and there's nothing left for them to grow with.
Exactly.
Okay.
Another thing you can look for is like a sudden spike in the dividend yield,
Okay.
which could be a sign of some underlying financial problems.
Okay.
So it's really key to look for companies with consistent dividend growth over time.
Got it. Consistency and stability.
Yeah, and that growth needs to be supported by strong earnings and a healthy balance sheet.
So tell me a little bit more about the companies that VIG actually invests in.
Yeah.
Who are these dividend all-stars?
So as of last year, some of the top holdings in VIG include some really big names that you've probably heard of.
No.
Microsoft, Apple, Johnson & Johnson,
Yeah.
United Health Group, and Visa.
Wow, those are some heavy hitters.
Yeah.
Like if you've got those companies in your portfolio,
Yeah.
you've got to feel pretty good.
Yeah. These are established companies. They've got proven track records of success.
Yeah.
And a real commitment to returning value back to their shareholders.
All right, so that all sounds great, but what about the fees associated with VIG?
Oh, that's another area where VIG really shines.
Okay.
It's got an expense ratio of just 0.06%.
Okay.
So to kind of put that into perspective,
Yeah.
for every $10,000 you invest,
Mhm.
you're only paying $6 in fees annually.
$6. That's it.
Yeah, pretty much.
Wow. Compared to some of the other fees I've seen out there,
Yeah.
that feels practically free.
And low fees are so important because
Yeah.
they directly impact your net returns over time.
Absolutely.
Yeah.
So we've got these big name companies, low fees.
Right.
But what about the actual performance? How's VIG stacked up against the market?
Yeah, that's the real test, right?
Yeah.
So VIG has a really compelling track record over
Mhm.
the past 10 years. It's outperformed a lot of other high dividend ETFs.
Really?
Yeah. And it's even beat the S&P 500 in certain periods.
Oh,
For example, between 2015 and 2020,
okay.
VIG delivered an average annual return of about 10.5%
Okay.
compared to about 9% for the S&P 500.
So it's not just collecting those dividends.
Right.
It's the potential for the ETF to grow over time as well.
Exactly. You got it.
That long-term growth potential. I mean,
Yeah.
that's a huge part of why this is appealing, right?
It really is.
Absolutely.
And another factor is the resilience of these dividend-paying companies.
Oh, okay.
Especially during like economic downturns.
So we talked about avoiding those dividend traps.
Yeah.
But how does focusing on this dividend growth strategy help weather those economic storms?
That's a great question.
Yeah.
So companies that prioritize those consistent dividend increases,
Mm-hmm.
they tend to have stronger balance sheets,
Okay.
more stable earnings.
Got it.
They're just better equipped to handle market volatility
Okay.
because they're not just focused on those short-term profits.
They're playing the long game.
Exactly.
Okay.
And their commitment to sharing those profits with investors,
Uh-huh.
it adds another layer of security, I think.
That makes a lot of sense.
Yeah.
Okay, so we've talked a lot about VG.
Yeah.
But I know this research paper also touches on a couple other Vanguard dividend ETFs,
Right.
VYM and VGI.
Yeah.
What are the main differences there?
So VYM,
Okay.
that's the Vanguard High Dividend Yield ETF.
Okay.
And as the name suggests, it prioritizes those high current yields over potential dividend growth.
Gotcha. So it's kind of like, maybe you get a bigger payout up front.
Yeah, it might be tempting to chase those big yields.
Yeah.
But it's really crucial to consider, are those payouts sustainable?
Yeah.
So VYM might hold some companies that have those higher payout ratios that could put their dividends at risk if earnings take a hit.
So with VYM, you might get that big payout up front.
Right.
But with VIG, the idea is that those payouts are going to keep growing over time.
Exactly.
Okay.
Yeah.
And what about VGI?
So VGI is the Vanguard International Dividend Appreciation ETF.
International, okay.
Yeah. So this one focuses on international dividend-paying companies.
So adding some international exposure could be good for diversification.
Yeah, that's right.
Gotcha.
But historically, U.S. dividend stocks have shown to be more stable and reliable.
So maybe VGI offers a little bit broader global perspective.
It does.
But VIG potentially offers a little bit more peace of mind, at least based on past performance.
Yeah, precisely. Each ETF has its own strengths and its own potential drawbacks.
Yeah.
And the best choice really depends on your individual risk tolerance.
That makes sense.
Your investment goals and your time horizon.
Wow. So much to think about. I'm ready to keep digging into these ETFs.
Me too.
But before we do that,
yeah,
what are some key takeaways for our listener about VIG so far?
Yeah, so I think the most important takeaway about VIG is that it really prioritizes that long-term dividend growth over just chasing those high yields.
Got it.
So this makes it particularly well-suited for investors who are seeking stable growth and rising income over time.
So not about getting rich quick.
Right.
But building that wealth steadily over time.
Exactly.
I like it. And we talked about how VIG holds shares of those industry giants.
Yes.
Those companies with solid track records. And that commitment to sharing profits with their investors.
Yeah.
Plus those super low fees really add up over time.
Yeah, for sure.
But I know this research paper also mentions something called reinvesting dividends.
Yes.
And I got to admit, that part's always a little fuzzy for me.
Yeah, reinvesting dividends can be a really powerful concept.
Okay.
So basically what it means is you're using those dividend payouts to purchase additional shares of the ETF.
Hold on. So you're not just pocketing those dividends as cash.
No.
You're using them to buy even more shares of the ETF.
That's right.
Oh, wow.
And that's where the magic of compounding really kicks in.
Okay, hold on. I think I need a little compounding 101 here.
All right.
How does that actually work?
So imagine you buy, let's say, 100 shares of VIG.
Okay.
Those shares generate dividends, right? You then use those dividends to buy, let's say, 2 more shares.
Okay.
Now you have 102 shares generating dividends.
Okay.
Those dividends then buy you, a fraction more shares, and so on and so on.
So it just kind of keeps building.
Yeah, it's a cycle of growth that just builds upon itself over time.
So those reinvested dividends are like little worker bees.
Yeah.
Constantly building up the hive.
I like that.
I like that one too.
That's a good one.
So I see why they emphasize the importance of reinvesting in this research paper.
It's a game changer.
Yeah.
It can make a significant difference in your long-term returns.
Got it.
And the earlier you start, the more time that compounding has to work its magic.
So compounding, definitely adding that to the to-do list.
Definitely.
But before we wrap up our deep dive on dividend ETFs,
okay,
anything else our listeners should keep in mind?
I think it's really crucial to remember that this research paper is just a starting point.
Okay.
Investing always involves risk. And it's so important to do your own research. Your due diligence.
Absolutely.
Understand your risk tolerance.
Yeah.
And really consider your overall financial goals.
Couldn't agree more.
And, while we've been talking about Vanguard ETFs, there are tons of other great options out there.
That's right.
So don't be afraid to explore and find investments that really align with your individual needs.
Yeah. And it never hurts to consult with a financial advisor.
For sure.
Especially if you're feeling a little overwhelmed or not sure where to start.
Right.
They can help you create that personalized plan.
Absolutely.
And guide you through the decision-making process.
Yeah. Great advice.
So before we let you go, any final thoughts on dividend investing?
Yeah, what I find really compelling about dividend investing is that it can be a way to really align your investments with your values.
Oh, okay.
So by choosing ETFs like VIG, you're essentially investing in companies that prioritize sustainable growth, responsible management, and a real commitment to sharing profits with their investors.
I like that.
It's a way to put your money to work
Yeah.
in a way that feels both financially sound and ethically aligned.
So it's not just about chasing those returns.
Right.
But it's about supporting companies that are, you know, doing things the right way. Exactly.
Like you can feel good about investing in.
That's the idea.
Yeah, I love that.
Yeah. And in a world that, you know, often feels driven by short-term gains and quick profits, I think dividend investing can be a refreshing reminder that long-term value creation, you know, both financially and ethically is still possible.
Yeah, that's a great way to put it. It's about finding those companies that are built to last.
Yes.
That are committed to growing responsibly and sharing their success with their investors.
Couldn't have said it better myself.
It's like finding those rare gems in the market, companies that are not only financially strong, but they also, you know, stand for something you believe in.
That's right.
Yeah.
It's about investing with both your head and your heart.
Investing with your head and your heart.
Yeah.
I love that.
Yeah.
That's a fantastic takeaway.
I think so too.
Investing with your head and your heart.
Yeah.
That's a fantastic takeaway.
It is.
It's not just about the numbers.
It's about finding those companies that really resonate with your values.
For sure.
Or your vision for the future.
Absolutely. Yeah. It's about finding companies that you believe in, that are making a positive impact on the world while also generating solid returns.
I don't know about you, but I'm feeling pretty inspired to go do some more research on these dividend ETFs.
What too?
Maybe even add a little dividend growth magic to my own portfolio.
Yeah. Always exciting to discover new investment strategies and find those hidden gems in the market.
Well, thanks for taking this deep dive with me.
Of course.
I always learn so much from our conversations.
The pleasure's all mine.
And to our listener, we hope this deep dive has given you a solid foundation for understanding dividend ETFs and the potential they hold for building long-term wealth. Remember, the best investment is the one that aligns with your individual goals, your risk tolerance, and your vision for the future. So do your research, explore your options, and happy investing. I think you're right. It is all about, you know, really aligning those investments with your values and your vision for the future.
It is. Yeah. It's finding companies you believe in.
Yeah.
Companies that are making a positive impact.
And doing things right.
Exactly.
Yeah.
For sure.
I don't know about you, but after this deep dive, I'm ready to go and do a little more research on these dividend ETFs.
Me too.
Yeah.
I always find it exciting to learn about new investment strategies and find new companies.
Well, thanks for taking this deep dive with me.
Oh, of course. It's always a pleasure.
Always learn so much from you.
Likewise, I always enjoy our conversations.
And to our listener, we hope this deep dive has given you a solid foundation for understanding dividend ETFs and the power of long-term investing. Remember, do your research, explore your options, and as always, happy investing.